I don't even know where my glasses are, but let's get into the video. So some of my friends were talking about in this group chat on Snapchat, which I don't even go on Snapchat really, so I don't really text. The only thing I texted is like this one group chat, Wakiosha, and then I'll talk to Mason a little bit and then Josh a little bit. When Josh asks me a question or something, and Mason just I don't even know what that dude talks about. But anyways, they were talking about being super bullish on the day, which I didn't open it until it was like too late because I actually woke up at 9. That's why I didn't trade today. Um, I had a super late night and shit, bro. It was so bad, bro. But anyways, we would just be doing a study session today because I didn't trade and I need something to do to fill up my time with my day. So here we go. I got these 5 like things you guys probably would want to know, which is just like higher time frames to determine bias. Carson asked me about Fibonacci, high probability inversion for value gaps, and I'll do like a little lesson on front running for value gaps. I wouldn't recommend front running for value gaps really, but sometimes it would print. So I'll try to help you so you don't like fuck it up or something. And then I don't really know what to do for the last one. You guys can ask more questions and we could do like a study session number 2 or something. But I got valid SMTs for the last one, which I didn't even like look for it, so I'll um I'll try to find something, I guess. So higher time frames to determine bias. One, all right, I deleted like all my draws on liquidity, but it looks like right here, this would be 15-minute equal lows, which is a super high draw on the NASDAQ, not on ES. And you also have triple 15-minute equal lows. And this one is also New York AM low. And this is London plus 15. All right, so you guys basically get it. I don't want to really type all that out right now and whatever. Delete that. And we still have a lot of draws to the downside. London low and Asia low plus LRLR. Which LRLR just basically means low resistance liquidity resting. And then we got pretty much Asia low and London low are pretty much equal lows. So you probably wouldn't target London low. You target Asia low, just because it's 5 points away. And then we got new week opening gap, which usually like 99% of the time always gets filled. And then I always mark up bottom of new week opening gap because again, it likely almost gets filled and like almost completely filled. And we got New York PM low all the way down here, which it also would be a daily low, but I wouldn't expect that one to get hit. It is pretty far. And this data low, I mean, it could come all the way down here, but it's pretty far. I would like to see that though, for personal preference. Yeah, just higher time frame draws on liquidity, which super freaking great draws right there, like literally the best draws. Along with these, so yeah, after you figure out your draws and liquidity, where it would more likely rather go, Plus, you also got to factor in that in the middle of the week, like on a Wednesday, it's possible for a reversal. Like Monday, Tuesday, could be bullish, and then Wednesday reverses, and then Thursday, Friday carries out the reverse, which is like kind of exactly what happened with here. And if you hop on a 4 hour time frame, you see that yesterday and this morning, we were just making high time frame bearish PD arrays, and PD arrays, PDO arrays is just ICT concepts, pretty much. Order blocks, breaker blocks, for rally gaps, inversion for rally gaps, rejection blocks. There's a lot of freaking blocks, which is like a mitigation block. It doesn't even fit on the screen. Mitigation blocks, which you really don't got to worry about mitigation or rejection blocks. But yeah, I mean, there's a lot of freaking block concepts or whatever. But those are like not even important, really. These are really your main ones. And they're all just PD arrays. Okay. So we inverse this 4 hour bullish for rally gap. Inversed. And inverse would be this for rally gap right here. Bottom of this wick. Right here. And the top of this wick. And then you get a for rally gap. It'd be for rally gap, and then a closure past it would be the closure past this candle wick would be the inversion, which you guys would understand, I think, right there. And then this is an order block right here, the down move before the up move that takes out the swing high. There's also like different ways they explain order blocks, but that, in my opinion, is like the easiest, best way to understand it. It's just the down move before the up move that takes out a swing high. This would be the swing high. Or even this swing high. Okay? That would be the order block, which gets hit and then goes up and, you know, sweeps out liquidity, comes back down, goes down even further, and then this order block right here with this move past it makes it an invalid order block. And then this invalid order block turns into a breaker block with a high right here. This is a high of this leg, high of this leg, the low of this leg, and it creates a higher high up here, and then a lower low right here, okay? So this higher high gets swept, creating a higher high, and this low gets swept, creating a lower low, right? High, low, higher high, lower low. Same concept for bullish ones. So if I can even find one. Can I even find one, bro? Probably not on the 4 hour. Shit, choppy. I guess it was because it's Christmas. I'm looking at Christmas and shit, bruh. and it doesn't even go that far. Whatever. Um, but it pretty much looked like the same thing. Same concept, whatever. Um, just like a tiny bit different, just because it's gonna be bullish instead of bearish, right? So, bro, there's freaking one right here. So we got a low, a high, a lower low, a higher high. It's pretty much like opposite. So this one's gonna be a high, low, higher high, lower low. This is gonna be a low, high, lower low, higher high, and then it gets tapped into right here. And this would also be an order block too. Right here, boom, order block, and then a breaker block paired. So it was just a super strong draw. And it's still respected right here. So this is why it's like super choppy too. But anyways, so bearish because it inversed on the higher time frame, and then it created a higher time frame breaker block PD array, which gets respected and reverses out of it. Okay, so it reverses and delivers out of it, and then it hits all these higher time frame PD arrays as well. We're delivering from a 4-hour breaker block, 4-hour inversion, 4-hour Fair Value Gap, 1 hour Fair Value Gap, a 15-minute first presented Fair Value Gap, 2 5-minute Fair Value Gaps. One of them is unmitigated as well. This first presented, actually the first presented would be up here, but this unmitigated 5-minute right here, stacked 5 minutes, gets hit with this data high, and then it reverses. Okay, and it also like inverses right here. You literally could have taken this right here, just because you're like, it's not the cleanest V shape, but you're not gonna have that much volume. Plus you're not gonna have I don't know. You're just, it's not going to be perfect because the volume is not there, but your liquidity and your bias would be 100% correct. I actually would have taken this um, for like literally 200 points. But I didn't even wake up, so it's whatever. But yes, that is why the higher time frame would determine your bias. Okay, and yeah. So what is next? Fibonacci. I actually told Josh that last night. I don't know why he didn't say that in the group chat, because I literally told Josh it looks super bearish last night. But Fibonacci, okay? You can use Fibonacci in many ways, and here is what mine looks like. So you especially gonna need the 0.62, because this is the highest used one that I have, 0.62, and then the 0.79. 0.79 could determine like the highest point it could possibly ever go, because you don't want to see any closures past the 0.79 mark, or else it would most likely flip. And then the 0.62 mark, it's just like a high, super high resistance mark. And I like to pair the 0.62 mark with a fair value gap that lines up like perfectly with it. It actually shows up today. And it was one of the things I wanted to see in the day, and one of the reasons why I didn't take a trade. So 0.31 is just the 0.62 on the opposite side. You know, it's half of 30 or half of 62, and then 0.5 equilibrium. Obviously, it's pretty basic boot camp TGR stuff. But yeah, and we will go into some like live uses of it. Okay. So how I use it is I use it in a down leg. Okay. This is, I mean, it's not the cleanest down leg right here. But if you see like my 5 minute for value gap and this 15-minute for value gap, you could like do the from the data high right here to the bottom of this one. And the 0.62 mark lines up pretty much perfectly with this 5 minute for value gap, right? You want to dig in this 15-minute, hit this first presented unmitigated 5 minute for value gap, and then you want to see a strong reversal out of it for continuation model, which continuation model is literally like what I trade 80% of the 75% of the time probably. Um, Otherwise I'm using breaker blocks or reversals. And yeah. So 0.62 didn't get hit. The volume got super freaking choppy after this 200-point move. It didn't want to go any more, bro. Like people literally just quit, I guess. There's too much news going out. So I don't know. This week is probably cooked, but I'll be looking tomorrow. But yeah, so in a clean leg, there shouldn't be like, say like this right here. This would invalidate the fib being like that. Okay, the fib would then be like from this to this high. That would be the fib that would, and it would need a rebalance. Um, which pretty much gets a rebalance with this candle right here at the 0.5 pretty much. But you know, that's it. I usually use it on like the 1, 5, or 15-minute, just because they're gonna be the cleanest. Like, there's a lot of like freaking ways you could use it. So this 1 minute right here, this 1 minute leg from this high to this low, and this separates it. It doesn't fully balance it, but it does balance. It does technically balance this um for rally gap too. So and with like speed and shit, like this shit you gotta factor in right here. So this down leg right here, this one gets hit at the 0.5 mark. There's this down leg right here. This one gets hit at 0.62 mark. Right here, and it reverses. Okay, so 0.62 is like the highest resistance part of it. So that's just how I use Fibonacci. I think you can see right here too. I'll show you. I'll show you the 0.79 part of it. I think it works out right here. So with this breaker block, this bullish breaker block, it's gonna be bottom of this candle, top of this candle. Just the candle, not the wicks, okay? That's how you mark out your order blocks and your breaker blocks. And as you can see, consequent encroachment is like the 50% mark of like PD array or whatever. But using the Fibonacci as well, right there, you can see that there's no closures past this 0.79 mark of this PD array. Okay, and then it reverses. Okay, so it's stuck in between two high time frame, whatever, and starts dropping. Now, since it was retested already, it might not hold out for long, but I mean, the more it gets tested, the more it likely fails. Just like with girls, bro. Come on. And yeah, it probably also works out with this mock trade. Okay, look at this. Top of this wick, bottom of this down wick. It pairs up with this 0.62 mark. This 5-minute fair value gap pairs up with this 0.62 mark pretty freaking nicely, right? So it's just another added confluence, okay? This clean 5-minute down leg, top of this wick, bottom of this downward candle wick, not this one, not this up leg. It's the bottom of this downward candle leg. It just has to be like the same downward candle leg. That's how you use the fit. Okay, it's that 0.62 mark. It begins to show weakness paired with weakness inside of this 5-minute fair value gap, and you just look for an inversion right here. Like I would have used like this fair value gap too, and high probability fair value gaps can be like shown with when, so you get this fair value gap, but this candle and this candle right here, they look super weak, right? So market needs more liquidity, more people. They balance out this fair value gap right here. Just cause this candle is super weak. Where's my marker, bro? It's not that one. I think it's like, what the hell is this red thing? Oh, equal highs. So why does that chain look so goofy? So you get a fair value gap, right? Boom. But this one closes like a doji candle pretty much. And doji candle is just pretty much like a small candle, right? It shows weakness. So if this closes super weak and leaves it behind a fair value gap, the chances of it getting hit, of this fair value gap getting hit, would be higher. Okay? And then you get a move down, or you get a continuation or whatever. Okay? That's a high probability fair value gap. But if this closed, say this candle closed like consequent encroachment of this 30-second order block. Say close down here. Then you just literally have to do a market order, because the market, if the volume is there with speed, it's likely just gonna freaking leave without you. And it's like 50-50, like looking like 50-50, but you don't even want to risk that chance that it leaves without you. You know what I'm saying? Like, say you entered like right here. It'd be 3 more points to enter, and you could literally have made, all the way freaking down here. But yeah, you just don't want to risk something stupid like that. I actually had a long trade idea that would have took freaking forever, but it did work out, I guess. But yeah, this one mock trade is literally fine. Like, dang, bro. Anyways, yeah. So, where was I at now? Oh, we should look at. So this is a good example too. Let me just delete this. This is a good example too, okay? See how there's a 1 minute? There's a 1 minute fair value gap right here. Right? There's a 1 minute fair value gap right here, okay? We do not really care about that 1 minute fair value gap. Even though it's a higher time frame than the 30-second, even though it's a higher time frame than the 30-second fair value gap, this downward move right here separates this leg from this leg. So this 30-second fair value gap right here is the highest time frame fair value gap, inversion fair value gap of that leg, of this leg right here. This separates these legs, right? This downward move separates these legs. Okay? And your RR is just going to be so much freaking better. We can even like measure RRs here. So if we would have entered right here off this 30-second with a 6.75 stop, all the way to here, you get a 1 to 11. 1 to freaking 11 RR. And then let's go to the 1 minute. Ah, fuck, where are we now? You could have caught this. Let's say you caught this retest. So you caught this retest. And your stops would be probably above this fair value gap and above this wick. That this is a wick that manipulated. So this is a good stop too, because this manipulation wick, manipulation leg, would be protected. That's a protected stop. Still protected stop. And if I entered up here, I'd honestly already be either here or break even already, you know? So this RR, say you got this, say you caught this retest at this spot right here, it'd be a 1 to 7 RR. You know, would you rather have a 1 to 7 RR or a 1 to 11 RR? And you're risking $130 ish, $130-ish versus what even is this, bruh? $200. You know, it's gonna be so much freaking better. Like, what's $70 more to get a plus 4 more RR or 13 more, 13 more points, right? So this one is 66.767, and this one is 74.7, and the math would be 8 points. 8 points is $160 more, so you're risking $40 more to make. All right, that actually makes so much sense. What? 160, risking 40 more dollars, or yeah, something like that. But anyways, so that trade would have played out. I think I had it actually down here, or maybe even all the way down here, but I just recognized there was an SMT already. So, and I didn't even take this trade, but I was just watching and sitting on my hands because couldn't take it. I think I actually came back and it was like down here because I had to go let the dogs out and smoke. But yeah. So anyways, what do we even got next? Where did that box go, bro? Where did that box go? All over there? What the fuck? So, high probability inversion fair value gaps. I guess that also pairs with your bias and your liquidity sweep. Liquidity is literally king, okay? Oh, there's also, delete all this freaking shit, dude. I actually might keep that breaker, but I'm deleting this. There was a change of this day on the 4-hour too. But liquidity is king. It depends all on how strong your liquidity is, how strong your bias is, and yeah, what it like literally just depends on what are you delivering from. Are you delivering from the 5 minute fair value gap and the high time frame fair value gap? Are you delivering from a liquidity pool, like a London low or session low, or equal highs, equal lows, new week opening gap, new day opening gap? Um, you know, these are just like your confluences, and this shit is running up like a motherfucker, bruh. But anyways, this would actually be a super good trade. Um, like SMT to add to your confluences. But yeah, it literally all depends. Like inversion for gaps, the inversion for gaps are everywhere. Okay, like look at this. There's a lot of V's. There's a lot of everything. But how would I know how to take this inversion for gap instead of, like this inversion for gap or something? Like sure, this did run up a bit of points. Actually, this is not bad. I actually like this trade. I actually do like this trade. There's a breaker block right here as well. But like this inversion for that, okay? How do I know not to take this inversion for that yet? All you got is this turtle soup. And turtle soup is the inside move to external move. Okay? Like this would be an inside move if it's swept. Say it's swept here, say I swept like all three or all of these. Say I swept all of these. This would be an external move. And it would like deliver down here or something. Okay. Like this is inside of this range. This range right here, it's inside this range. This would like technically be the external. Right there. Okay. And like this is external to internal. Like this would technically be like the outside one. Like it's out of this like range ish. But yeah, there's an SMT right there. That's why we kind of like moved. It would have been better if this was the SMT, I think. But yeah. Anyways, turtle soup. That's what turtle soup is. Internal to external, which it didn't even hit, but like internal sweep right there, and this would be the external sweep right there. Maybe there's SMT. I don't know. But yeah, that's what turtle soup is, and this is like your only liquidity sweep that you have. And sure, you flip this one, but you're also sitting in like a 5 minute for betting gap. I think you're only delivering from a 15 minute for value gap, and like not much of the 15 minute either. Like you literally had to climb so much higher to pick up more orders, but it didn't. Like I'm just literally just guessing there wasn't much orders to pick up. And as you can see, Fibonacci, like I don't think 0.5 is enough premium. This side is premium, this side is discount. There's not enough like premium orders. Like if it hit the 0.62 mark and the 5 minute, that would have been so much better. It would have delivered 800 points today, but it didn't. So we just had to miss out. That's literally exactly what I wanted to see. Like this is the 15-minute time frame, by the way. Chop, 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 chop. It's like a W push. W. Um. So yeah, it just literally everything will depend on how good your liquidity sweep is. Um. So yeah. But yeah, this would have been a perfect trade. SMT's at the highs. It was delivering from a 1 hour um, rally gap from ES, and ES also finally swept the triple 15-minute equal highs, or a triple 1 hour equal highs. Sorry, plus Asia high. So I finally swept that, and then that's when I would have took that mock trade right there, the A plus plus setup. But yeah, super obvious trade. Very good trade. What else we got? It literally just all depends on your liquidity sweep. And high prob or front running for value gaps. Now I don't recommend this. Like, you should probably just wait for the candle closure, like the real inversion. But sometimes it is good. Sometimes it is good. Um, so I mean, these are kind of all like the same idea. It depends on your draw liquidity and your liquidity sweep that just happened. This is literally the one thing that you need in trading, and it's just liquidity. Okay, even with number 5, valid SMTs, depends on the liquidity pool, right? So front running for value gaps, I wouldn't recommend it. Like, what is a front run for value gap? It's basically saying so right here. There's 1 hour for value gap right here. And you think there's weakness to the upside right here, and then it speeds up, it explodes, and it has to come back down and sweep the triple 15-minute equal lows near AM low and London low 4 hour. Right? Why would it do that when it just inverse to the upside right here and exploded without taking like this high, this high? There's no way that you would front run this gap right here to the downside, even though these draws are super good. All right, you got triple 15-minute equal lows, London low. You got 15-minute equal lows, New York AM low. But that doesn't mean they're gonna get hit today, you know? Um, like, you just inverse this, exploded to the upside, you left liquidity, so there's no point to front run this, right? You almost have this liquidity pool right here. So there's no way it would, you would just enter right here because you think it's gonna go down, right? Now, let's look. What is this? Monday, December 25th at 8. Wait, what? Wait, where was I? What the fuck just happened? I don't even know what just happened. What the hell? I like got lost for like a second, bruh. Okay. Um, bro, where was I? Let's go back to the present, cause it's a gift, bro. Let's take these ones. See, this is one you would probably have to front run right here. So I think it looks like we sweep out New York Lunch High, which would start at 12. I don't know, bro. Which would start like whatever, bro. This one looks like one you'd have to front run as well. Um, but I just don't have like the data, bro. Okay, I see now. So this is still a good front runner here. I'm not even gonna lie. Just because we're delivering from a 15-minute, like we are on the 1 minute time frame right now, but I don't know that I switch and then move back. But I'm pretty sure this is an unmitigated 15-minute first presented, most likely. Um, yeah, the candle would close right here at the 12 mark. So this is an unmitigated 15-minute. And it digs in, completely fills it, looks like it's rejecting out of it. It starts slowing down. You get a doji candle, right? But there's no inversion right here. Like you could front run this. You could literally front run this. There's a doji candle. There's no inversions in this leg. Unless there's one on the 32nd. No, there's still not. There's still not. But you get weakness, you get doji candles even on the 32nd, even on the 1 minute, I mean. Um, and you see strength coming down. It moves down, it closes past, it moves down. Like you got a good liquidity sweep. This is a good front run. Taking a stab. It's cheap up here, but it'd be super expensive if you've got filled down here. You know what I'm saying? So I'm not saying you should front run. We did just take out a lot of LR as well. Low resistance, liquidity resting. So all this LR got swept. We hit an unmitigated 15, and then we delivered to the downside. That would be a good liquidity sweep to front run a gap for a cheap trade. Um, but I'm not recommending that. Okay. Also, you guys see how that candle closed? So this candle closed all the way down here, and this next one closed with strength as well, also inverting this one. But this fair value gap right here would be a breakaway gap. Like it just closed too strongly. This fair value gap, it's likely not even gonna get touched. Um, and if you took a short, like say you took this short right here, your stop was like 20 points, which is like $400. Like it's not terrible, but you know your RR would be so much better if it was up here, or even like it would be like right here. And if you took this trade all the way down here without front running it, there's always that possibility that it does come back up into it. But I mean, it's really not likely here with this strength and speed. It's really not likely. But there's always that possibility that it does. And if it stops you out, you're like low-key more cooked than if you got stopped out way up here, you know? So that's why front running is kind of good, but it will cook you bad if you do not take one with a good liquidity sweep. Like that would have been a good liquidity sweep just because it had all that lower resting liquidity. Or resistance liquidity resting, whatever, like plus an unmitigated 15-minute fair value gap. I mean, with 15-minute fair value gaps, there's also the possibility of it being having a 5-minute, which it doesn't on here, but yeah, an unmitigated 15 is a good liquidity pool. But yeah, bro. What else do we got? Valid SMTs. Yeah, that is right. I remember that. Valid SMTs. Okay. So, what would be valid SMTs? It's everything is about liquidity. Okay. It depends on the liquidity and how strong your that sweep would be. So obviously SMTs are, so these indexes correlate to each other. They're not called pairs, but they correlate to each other. You know, one moves up, one of them follows. So ES and Nasdaq, if looks like Nasdaq is leading to the downside today, and you can tell because the change in percentage. This one's at 0.6. This one's at 0.04. If you were looking at it yesterday on Wednesday, you would see like Nasdaq was like plus like 20 or so, and then at the same time, ES was minus 30 or some shit like that. You know, so ES was leading to the downside yesterday, but Nasdaq did end up following. You know, so you have a leading and you have a following, and you just gotta figure out which one to trade on. Because if ES took out this high, right, and then it also hit a 1 hour for value gap, that would be a good sweep from ES. And when you sweep, it reverses. So since ES was going upwards and hit a high liquidity pool of high resistance, Nasdaq was only down here. So Nasdaq is leading to the downside. So you would take shorts on the Nasdaq to the downside. Now, unfortunately, it's super freaking choppy. And if you look at where ES hit this SMT right here, it didn't really have to move much. So it hit this, took out triple equal highs, Asia high, 1 hour for value gap. It was just too choppy. It didn't have to move much just to take out this liquidity right here. But the Nasdaq kind of did because it has these large wicks, kind of. But yeah. So unfortunately, there was another S&T at the bottom, and we got a reversal out of it. So that's kind of just how S&Ts work. Like even right here, this 4-hour order block and 4-hour breaker block pair combined with this liquidity sweep, SMT. Let me just look. Looks like they both got hit. But Nasdaq didn't invalidate its breaker block that it had. So yeah, Nasdaq was respecting this breaker block right here, and the S&P completely invalidated it, having a closure past this candle. So yeah, but it also didn't close past this order block. So you know, that is that for SMTs. I think. But yeah, pretty obvious stuff, I think. Um, so NQ to hit this unmitigated new day opening gap yesterday. I wonder what. We swept this, but that would have been different. We almost got all-time highs. But yeah, this is like a whole different thing, I think. So, new day opening gap was the liquidity sweep from NQ to make ES go down. That's why ES was leading yesterday to the downside, because NQ was the one that did the sweep, and then it started a reversal, which I hope makes sense. I feel like this is a super long video because I'm playing music in my ear, and I'm pretty sure I went through my whole playlist. But 50 freaking minutes though? Holy shoot. But yeah, this video is going up. I hope you guys watch the whole thing, because you guys can ask me questions in the comments. I know a lot. I don't know everything though, but I do know a lot. So you guys can ask me any questions you guys have about these concepts, and I'll tell you what I think and what I know. And thank you for watching. We can do this again. Just ask me what you want to know. See ya.